Yes. Hello, this is Dave, and welcome to Equity Story. I'm here with Mr. Wolfie, and this is just general share advice and not personal advice. Wolfie, there's a lot of shares that put out reports today, and a lot of tech stocks which we're actually just not even going to bother talking about, and because the price action's so bad on them. We're just gonna. But there's maybe we did pick out one or two of those which we suggested we need to get on the watch list because they're good companies and they are reporting reasonably well. But the whole sort of tech space is just so damaged at the moment.
It is, and almost like everything's been painted with the same brush, right? So that's why we need to separate some of these things and put some on a watch list and some of them just discard.
All right, let's talk about some positive stocks. Obviously that we're trending at the moment. NCM came out with some very, very good numbers and looking like the ultimate gold play at the moment on our market, Wolf. So I think those all-in total costs were around that 1,500 Aussie dollars.
1,500. AASC was about 1,000. That's a reduction for the last two quarterlies now. So they're improving operationally wise. Also, I think also higher production as well. So what they've stated about 6 months ago when we first got interested, Dave, about turnaround for NCM, it's playing out, in front of our eyes. All we need is the gold price to really do a bit better for us, and we're probably going to see that $30 out of it. For the moment, I'm happy what I'm seeing today, and they are talking, still positivity moving forwards. Remember, they had that long-term plan till 2030, right? Which we obviously also we like. But that, to me, really, that's the ultimate gold play right now.
Absolutely brilliant, Wolf. And yeah, it is down, but it's still holding trend. And possibly, if you're a believer in gold, and gold, and actually, if you look at the gold price on the charts, it still looks pretty reasonable. Okay, maybe an opportunity. Wolf, ORA, we are trending this one at the moment. The target price is around $4. It looks like we're on the way there, champion. I think it's hit today. The highest hit 390. That's definitely I think at least nearly a 2-year high, and it looks like it's on the way. So nice little trend there working out, Wolf.
Yeah, well, today came out with an update. Nice presentation. Really got to like the company's management. They are the ones that have been, navigating this company through quite some difficult periods. I know during the pandemic, it sold off like everything else did. So we've got to forget about that probably a 1-year period or so. But since then, they've been really delivering, right? It's a global business. So they've got operations in the US and Australia and Asia. Overall, small growth. But, we're looking at this as a little bit of growth, a little bit of dividends. And I think it's paying about 4%. And not too expensive, right? So all these sort of three factors, I think it's a decent story that can potentially keep eking that, hitting those targets of ours that we said. So $4, I think, is doable for sure. And then possibly by the time we, getting closer to the next quarterly and August, which is the result, hopefully we'll be past at $4 and looking maybe they've at getting past the resistance around that $4. If you look at that, that's going to be quite interesting. But I'm still liking it. I'm still definitely going to be holding in there.
Wolf, PLY, it's been a great story for us. The price action yesterday was very, very good. It'd be interesting to see where this one ends by the end of the week. At the moment, it's sort of if it's below that sort of 88, I reckon it's sideways. But if it can end above 88, I mean, you'd be buying it, and it could potentially go a little bit higher. Announcement. What did you make of it?
Yeah, look, I think yesterday's price action was actually a leak of what they're going to release today. So yesterday,
no, would that happen?
I'm not sure, Dave, but really bad market yesterday. What went up 10%? I mean, makes no sense. And right at the end of the day, mind you, as well. So I think that someone's let the cat out of the bag. Anyway, look, very good quarterly, very, very strong. It is, due to the one-off of the beans, which delivered about $8.5 million in revenues. If you strip that out, it is still very good growth. I think they're still on track on about 100% growth for the full year without this one-off. They did say with the beans that it's going to moderate. Of course, they can't. There was a one-off, I think, mint, which gave them that 8 million. I think I calculate now at the moment, it's probably going to deliver a quarter, probably about half a million bucks in royalties from the sales of beans and other products they might have out there, which they're releasing actually today or tomorrow. Overall, games is the one that's going to drive. I think the beans side of things for play side could be potentially one of the best things I think I've ever seen, right? So 12 months time, we'll see where it's at. They're still developing that game. It's the current games that they're doing at the moment. The Age of Darkness still going okay-ish, and some of the others they're developing for some other companies like Blizzard, Activision Blizzard, for Meta as well. They're doing work. So overall, Dave, I'm really liking this story. Really, really good. Expanding. They're opening up a new studio on the Gold Coast, which I might go and visit. So I'm liking it. However, it's still expensive, unfortunately, around these levels. So I think.
And how's your bean doing? You bought a bean.
Yeah, I've got a few beans now. I'm addicted, Dave. Don't say anything.
What? So that's really that's so mature.
Yeah, that's.
You're a professional. You're a professional analyst in the financial services industry, and you're buying beans.
I know. But the thing is, you're gonna go big or go home. I'd say so. If this works out, I can retire, right?
So how many beans have you bought?
I've got 7.
Oh my God, you're going big time.
That's nothing big. Some of the big holders in there have got 50 beans plus, Dave. That's some ridiculous type stuff, right?
And what I think. So what do you hope to happen with your beans?
Okay, so what the hope is that, say the game comes out in 12 months time, it's going to garner, I suppose, interest from the gaming community out there. They'll probably have to go and buy some beans. You can probably make some money of your beans as well, because it's going to be like a play and earn type game they're developing. So overall, you hope that the value of your beans that you bought are going to skyrocket, right? That's what you're hoping for once the game comes out. That's the idea. Anyway, overall, Dave, I'm liking it. It's looking like a great company.
And are you having to pay more for your beans when you buy them, or is they all the same price?
No, at the moment, look, there's different types of beans. Some more rare than others, so they're more expensive than others. They're actually below what they've actually listed. Like, it's like a company. So let's call them share prices of the beans. So they're listed at, say, 30 cents, and at the moment around 10 cents. So it's the beans themselves are not going quite fantastically well, but the reason why is because there's no game at the moment. It's still another 12 months away. So potentially, if they can hit those targets and develop the game, then you might see the share price of the beans going up again.
All right. Absolutely. Okay. Oh my God.
Yeah. Anyway,
let us pray, Mr. All right, Mr. Bean. CIA.
Yes.
You know what I don't think they need water for their swimming pool. They can just fill it up with money and swim in that.
Yeah, look, it was actually, Dave, if you look at the numbers.
I know the costs were a little bit higher.
It was actually flat. If you look at the numbers, they were actually flat. If you look at the production numbers, everything was flat and the costs went up a little bit. So it wasn't nothing exciting, right? Nothing exciting in there. However, they're still making very, very good margins because the elevated.
It's the price of iron ore. Exactly. But the upside is the extension, isn't it?
Yeah, obviously. The Bloom Lake extension, absolutely. So the phase 2, that's probably going to add more production to it. So, you're probably hoping for higher iron ore prices for the next 12 months and Bloom Lake coming online. And that might see maybe even further prices drive higher.
Sure. ALK. And again, Wolf, I thought obviously the numbers not as good as NCM, but pretty respectful.
Yeah, it's a small gold miner. You've got to remember they only produce like 60 to 65,000 ounces per annum, which normally, Dave, in a normal market, you'd go, nah, I'm not interested. This is a small little miner. But they've got other projects, especially Boda. I mean, that's what the interest is really. And potentially that could be huge. They're going to release the first inaugural JORC resource by the end of June. So that's, within the next 2 months. I expect something big to start off with, and it could garner some interest, and you could see some potential partnering with Alkane. So look, I like the fact that at least they've got some cash flows, Dave, from that from the operations, and it gives them, they don't have to go back to the market to keep raising cash. So from that point of view, great, and they're doing quite well.
Wolf, PLS. So it's come down. I thought the announcement, it was okay. It's just nothing special. So, it's holding trend. That's all I can say about it. 88, cheeky announcement as they do.
Cheeky announcement that actually worked for a change. Normally, cheeky announcement after market close, it's usually bad news. And then I think, look, in there was some bad news, but they've given us enough good news. And I was a little bit scared that it's going to be weak today, but they've punched a lot of positivity in there, saying new products going to be released. They're still navigating through fairly well, but they did flag that there's the problem are still there, with the chips and everything else. So
it's interesting the fact that they're saying they've got chip problems, but we're hearing in America chip problems.
No, well, the American things wasn't about the chip problems. It was the fact that the actual demand peaked, right? And the demand, how we had that COVID period where every man and the dog, everyone was stuck.
Well, that's what I'm saying. So the demand for things with chips has peaked, right? So it's less, but you'd think it would have eased the chip issue, Wolf. That's what I'm saying.
I think it will eventually, right? So maybe that will cascade over the next, say, 6 to 12 months, Dave, from what we're hearing out of America. But I suppose when you think of it also, it's probably coming off a very strong period of demand. So the problems at the bottom end, it will still probably persist for some time, I'd say.
Yeah, I don't think the only issue I've got with that announcement, I don't think they've had issues, but they haven't not been able to get hold of chips 88, right? I haven't heard them say, "Oh, we can't get hold of chips for." Are they just using that as a little bit of excuse for just other issues?
Look, it's a good.
Isn't that like the easy thing for management to say?
Of course, it's a good cop out, right? For people to go and let's just blame it on the chips, right? Fairly easy to do so. I think they're fairly transparent, at least with every time announcement. They do talk about the actual chip shortages. They talk about how they've actually bought more to replenish their supplies and so on. So from that point of view, at least I can see what's happening with their inventory, which is nice. So look, you got to give a benefit to 88. At least they are on the front foot about the actual chip shortages, chip deliveries, and chip issues. So look, maybe that's what the market's looking at and thinking, okay, at least they are upfront, that we know what's going on. They also reiterate the guidance, which is nice. So all in all, not bad. But it's too early for us. We just got to wait for a little bit better times ahead. But it's definitely on my watch list.
Coles. Grew by 3%. Not bad for a dividend play, right?
That's all you need, isn't it? It's just a little bit of growth and just keep giving those dividends out. Absolutely. You got to be happy with that. So hold.
Okay, well, if we're going to talk about one stock, it's been sold off with a lot of the tech stocks, but one that you're quite liking. So obviously we can't buy this, but what we're saying is that just put it on the watch list. At the moment, the trend line is zooming down as fast, and we could meet halfway, somewhere around the 50 cents in a year from now. So it could, but it's one for the watch list. Tell us why, Mr. Wolfie, this is one for the watch list.
I'm just thinking, like I said right at the start, is that everything in tech stocks is just looked at with the same light. I'm looking at some of these tech stocks from a different angle, with a different lens. And what might be that is I'm forgetting about this as a tech stock, and I'm putting on my industrial hat on. And what would I buy this if this was an industrial stock? All right. So I'm looking at the growth. I'm looking at value. I'm looking at, is it profitable? All those little things that we look at when we look at our industrial industry. And you know what? This looks fairly attractive. If you forget about this as a tech stock, it's trading on about 90 million bucks. You've got I think they've talked about today that revenue is going to be about 60 to 62 million. So it's trading on about 1.5 times revenues, which is cheap, right? It is EBITDA. They've just moved from EBITDA negative to EBITDA positive this financial year. So that's a big plus. So we just need to probably wait till August to see how this performs, right? If once it hits EBITDA positive, then we want to see profitability out of this. You've got a bit of growth. So let's say 10% growth. It's actually in the industry that is growing. It's a niche. and that's captioning, translation, foreign languages and so on. So I don't mind this space. I think it's definitely there's a niche. There's probably a small growth in there. So from that point of view, there's a few boxes you can tick out of this, and I'd say within the next 12 to 24 months, Dave, this is going to look like a normal type industrial business where you might be picking this up really cheap. So definitely on your watch list.
Thank you very much for that, Wolf, and it does seem an exciting story. One story certainly out of favor, and it's amazing how the mighty have fallen, Wolf, over on some of these text Dubber. Obviously we're not interested in this with this price action, but what's the take on Dubber at the moment?
It's amazing how the market changes perception on things very, very, very quickly. So market darling 6-8 months ago, Dave, market darling. But then the market says anything that's unprofitable, losing money, we just don't want to know it. But what an incredible sell-off on these stocks, right? Some of them lost 80% of their.
And it's like we talked about. This is maybe from the Z1P factor. People
Z1P and some of these American stocks as well didn't help, right?
And you got 360 obviously having that.
Exactly, same thing, right?
So going lower, and now Dubber in the same boat.
Yep. Yeah, I mean, when you look at the bottom line, I mean, top line is growing, yes, but the bottom line is just still so far away from profitability or even cash flow positivity that you definitely have to go, and this is another zip in the making, right? It's just not going to be loved at all for a long, long time. And, there's always high risks with that strategy of losing money constantly at a fast clip. So, when we started looking at some of these tech stocks, Dave, early this year, I've made a conscious effort to look at stocks that actually are close to cash break even or profitable in the tech space. So we looked at, for example, things like DSC and some of the other stuff. We actually asked the question, how are you looking at balancing growth versus cash flows? Because it's a huge focus for the market participants out there. And so stuff like this, we're just not interested right now, Dave. Dub, 360.
And Wolf, as interest rates go higher, this story gets this gets worse, right? So you just wouldn't go anywhere near these. No. Now I want to talk about a story, Wolf. BTH funny enough, had a sell signal on our put on. So we said this was going down the weekend. It's going down. Weird numbers on there at the back end, Wolf. So just explain. Is this?
Can I explain? I don't think I can explain. I mean, this is unexplainable. It's like Bermuda Triangle type stuff, Dave. You look at the cash flows and the top headline numbers. They're obviously singing praises, and they should be, right? Because it's the company's idea is to talk about the positive stuff. Great. So we're looking at it around almost. For the full year, I think they're on track of about over 100 million in revenues, Dave. But then you look at the cash flow sheet, right? And you go down to the revenues, and then you look at the costs. And on 100 million, they're going to lose money. And you think to yourself, how is that even possible when you look at the actual staff costs out of what, 60-something million bucks? On 70-something million in revenues, and it's exponential almost, right? You've got a quarter right now, which they've delivered 30 million in revenues, and the actual staff cost was 26. So, say they get $1 billion in revenue, they're going to pay $1 billion in staff costs.
And those staff costs are just going through the roof.
I don't get it. If someone can explain to me, I'd appreciate it, because I don't quite get it. There must be some sort of a business model that's a little bit different. Anyway,
at the moment, from that point of view, it certainly looks like an avoid, really.
Absolutely.
I mean, the share price says avoid, and because those numbers certainly don't make sense to us, we're definitely an avoid. Wolf, FMG holding up pretty nicely. So the iron ore price hovering around that 135. I mean, what I would do, I just play it by the charts, Wolf. At the moment, if you're in it, it's a dividend play, hold it. If it gets much below 1940, then sell it.
Yep, I agree. Can we talk about a couple of American stocks, please, Dave?
Yeah, I know. I've got them up here. Right. First one, Facebook.
Yes. Okay, so I'm hoping, Dave, that we're going to have a better night tonight in the US. Now, it wasn't too bad last night, we have to say. So it was okay-ish. That's why we're probably up today. But Facebook really surprised after the markets today, basically saying the growth is back, Dave. There's more users coming back and engagement from Facebook users. It's interesting, isn't it? Have they done anything different to do that? Or is it just a one temporary? But anyway, the market's lapping it up. They're loving it, that update. And after market's up 17%. So potentially we're going to see a little bit of action.
And did they say why?
I don't know. I didn't see that. But I think from my point of view, Dave, I think what they've done is they did implement some more moderation on Facebook, and they should, right? So maybe that's attracting more people that, look, we don't want to see all these hate stuff and la, right? We want to see a little bit more content that's actually, you can actually read without cringing, potentially. Maybe that's what it is. And I don't know. I mean, it's interesting, isn't it? I mean, maybe we'll just see, we'll see a bit more commentary within the next couple of days, but just good to see that Facebook is actually delivered something that the market can hang on to overnight tonight.
All right, and next one off the list is PayPal. Now, again, see how the mighty fall. How are they doing after market?
Badly, they actually didn't report even though it's after market, it's up. Very weak guidance. So they're saying that the transactions are weakening. I tell you what, I'll be selling even further. This could get back to $50.
No, it looks absolutely terrible.
Yeah.
Anyway.
Yeah. So that's interesting. Is that it's up after market, so maybe it's better than people expected. So maybe there'll be a bounce closer to that $100. I don't know, but I certainly would not be buying PayPal, and I certainly still wouldn't be buying Facebook. But I'm just hoping that at least it's a good reflection on the Nasdaq. So because we don't want to see a free fall from Nasdaq, that's for sure.
Yeah, it's looked like they're only around 207. Facebook around here, but I mean, you still look at it. There's problems there, right?
Yeah, there is.
It's a little bit sort of a bit of hope, but I mean, yeah, why would you buy that? You just wouldn't.
No, you certainly wouldn't.
On that note, Wolfie, listen, thank you very much. Thanks for looking for all the stocks today. What we'd like to do is just confirm really NCM, which we're trending, and ORA are both looking very, very good and hold in there.
Yes.
And a few stocks, AIM, get on your watch list. I mean, it's not now, but maybe in 6, 7, 8 months, we'll have a little opportunity there.
And PlaySide still a hold. I mean, you had a really great result. Play those trend lines, Dave. I think that's probably the key here. We know it's a little bit expensive, but as long as you think that 80 cents, I think I'm still happy to hold.
Okay, on that note, thank you very much, Wolfie, and good luck with your beans, champion.
Please.
All right, thank you. Thank you. Bye-bye. Bye-bye.